Hey, how you guys doing? Ben Garden here. Today is story time. It's May 23rd, 2019, and I want to tell you guys how I made $1,000 in 5 days. So if you guys have been following me on Instagram, you know that I've been tracking this story. Recently I bought a stock, told you guys what price I bought it at on the day that I bought it, and then kind of over the next 5 days tracked the price, kind of did this like Netflix and stocks update. And I just recently sold it 2 days ago, Monday, and made over $1,000, $1,100. So this video is gonna be all about how I did that. Why did I buy it at a specific time? Why did I sell it at a specific time? What did I do to minimize my risk? Why did I buy that stock in particular? Just kind of like documenting the thought process of going through it all. Before I do this, I should probably get a coffee. Coffee is, heat up water. Coffee's my favorite meal of the day. You guys probably already knew that. Cheers. By the way, I should mention that this video is not in any way trying to show off or talk about how you made money really fast. That's not about that at all. If you follow most of my content on Instagram, it's usually value-based investing. It's like holding for the long term, thinking about retirement, planning early retirement. None of it's get rich quick. This video, this kind of stuff, trading stocks and like trying to turn a profit in 5 days, that's just for fun. That's like, I find that entertaining for me, I find that fun for me. So that's kind of just why I'm sharing this. It's like a small interest of mine, it's a passion. So this video is purely educational. It's not financial advice. It's just more, I guess, documenting the process of me doing it, sharing my interests. And if you guys have any questions about it, just let me know in the comments. All right, guys, so we're in the Questrade platform. We're looking at the Organogram Holdings stock right now. And this was the stock that I bought that kind of went up by 18% in 5 days. And I'll kind of talk through the process of why I decided to buy it and when and all the technical stuff. For the most part, it's a pretty gradual growth. There are a little bit of spikes going up and down, but overall it's trending upward. Down here in the bottom right hand corner, you can see these little green arrows. You can see them up here on the top as well. So that just indicates to me that in the software that that's when I bought the stock. And if you hover over it, it tells you how many units you bought, at what price. And same kind of deal, if you go up to the top here, this red arrow tells you when you sold. So essentially, you can see that I bought on May 13th, and it basically rode this upswing and sold on May 21st. Now to speak about this a little bit, so I'm in Canada, and we just had Victoria Day weekend, so the Monday businesses were closed, the stock market was closed. So really what we're looking at here is 5 days of the market. So we had the Monday, Tuesday, Wednesday, Thursday, Friday. There's no stock trading on the weekend, so there's no bar for that. The Monday was Victoria Day holiday, so there's no bar for that. And then on the Tuesday, I put in my order to sell, and that's why there's a little red arrow here that indicates that. So in terms of this really microscopic view, like just this tiny chart up here on the top, and every bar here represents 1 day, it's really just showing 3 weeks or so worth of information. And based on this, you can see that this was a good trade because we entered just as this market had pulled back, and we caught this upswing, and I had placed an order to sell before the market had started that day, so it sold for a fair market price, and since then it's been fairly steadily declining. So if we take a look at some of these, if I hover over the entry here, you can see that in terms of units, 640 units at $9.35 a share. If you take 640 units times $9.35 a share, that's how much money I invested. So you can calculate that out. And that was basically in the market, and it rode this upswing and cashed me out at an average price of about $11 and let's say 7 cents. So if you multiply 640 by $11.07, that's how much money I ended up with at the end. If you subtract the money that I invested at the beginning, you get the difference. In this case, it's roughly $1,100. which is all profit, which is awesome. So I was happy about that. So in total, I spent basically $16 to turn this money into this money, which is great. Now, to speak a little bit about how I decided to enter and how I decided to leave. So generally, I take a long-term view. So if you look at the bottom chart here, multiple years, you can kind of see that the general trend is that this stock is going up. If I bought this stock and held it for a year and no other factors came into play, the price would probably be a lot higher. So maybe I should have held it. Maybe this is like a medium term, long-term hold. I don't really know. The reason why I bought here was because if I zoom this top chart out a little bit, you can see that it kind of spikes in, I'm not going to say predictable ways because nothing's predictable, but it does kind of jump and then pull back. And then there's a run and then a small pullback. I'm looking at the red and the green right now. So let's say starting from this red right here in the middle of the screen, just as it pulled back, there's a bit of a run here, pull back, run, pull back. When I saw that there was recently a pullback, I decided it's probably going to be a run. So place an order here, bought in, and immediately the next day the price started going up, which was great. Another thing, because trading stocks are a little bit more risky as compared to long-term investing where you just hold it for like 30 years, anything could have happened this day. So when I placed the order this day, yeah, it may have went up. It could very well have just gone down. Maybe today was the day that the recession started, or maybe something was released about the company, something unfavorable, and everyone lost faith in the stock, or maybe they released some financial holding information and people lost faith in the stock. It could have gone down. So one way to protect myself, or that I'm learning, is that you can also enter in stop losses. So when I placed this order, I said buy this at $9.35, and I put in a stop loss order at $8. So that means if the price dropped and I was at work and I wasn't paying attention, or I was in the subway and I didn't have like Wi-Fi and I couldn't log in and sell my shares, it's kind of like a standing order. So if the price dropped to $8, it would have triggered that order and it would have just sold automatically on my behalf. I would have taken a loss. I would have lost some money because I bought in at $9.35. It would have dropped to $8. I would have lost the difference, but at least I wouldn't have, my stock wouldn't have gone to zero and I would have lost all my entire investment. So there's a way to protect yourself when you're not paying attention all the time, because I have too much stuff going on. I can't pay attention all the time what the stock price is doing. I have a theory about something, I'll place my investment or my trade, but I have like things to do 9 to 5 and I can't pay attention all the time. So I'm using stop losses, and that's something that I find is useful. They don't always work all the time. If you can imagine, if I go back here, if I zoom out, so in this top right hand corner, let's say I had bought there and I had my stop loss at $8, but this just tanked immediately. Something happened, the CEO did something illegal, whatever, the stock price could have tanked all the way down to $6, like immediately. It would have blown through $8. Nobody would have bought this stock for $8. Nobody would have wanted to buy the stock for $8, is what I'm saying. So when my order triggers and says, oh, it's dropped below $8, Ben now wants to sell, who would like to buy? Nobody wants to buy, so it doesn't actually get fulfilled. So I end up holding onto my shares, so I'm stuck with these shares. So stop losses don't always work 100% of the time, and that's part of the risk as well. So you reduce your risk with things like stop losses, but it never really fully prevents risk. So that was something important to mention. I will definitely, all my trades will always have stop losses if I'm in it for the short term. If I'm in it for the long term, it doesn't really matter. I'm going to hold the stock no matter what. So that's it. Essentially invested 640 units, bought 640 units at $9.35 a share, held it for 5 days, placed a sell order. I think I actually placed a sell order at market price, and I thought it was going to go for like 10 something because the day before it was between 10.5 and $11. It actually ended up selling for a little bit more, so $11.07 a share. It triggered, and that's it. I got all my money back, and I essentially made $1,100 in 5 days. If you saw those charts, they kind of look weird. They're like red and green. Those are called candlestick charts, and the reason why they look like that is because it tells you a lot of information for every little candlestick throughout the chart. So there's a specific way to read those, and you can look at the stock market charts in a whole bunch of different ways. I prefer a candlestick just because it tells me, I think, like 3 or 4 things, or 4 or 5 things, kind of all at the same time. So red and green. Red means that the price had gone down. Green means that the price went up. So those are kind of like up days and down days. In the candlestick, the reason why it has that shape, it's kind of like a rectangle in the middle, and it's got like tails on either end. So the rectangle in the middle is showing you the price at the beginning of the day and at the end of the day. So if the price kind of came in low and then it fluctuated and then it ended high, between the low and the high, that's where the thickness of the candle bar is. That's the color. And then the tails are kind of just showing you the extent of which the price had fluctuated beyond that. So looking at a candlestick for 1 day worth of trading, it's kind of telling you the entry price, the exit price, but also how far it fluctuated. And so there's a whole bunch of technical things you can do to read a chart. Yeah, so there's a whole bunch of different tools available to you, tons of things you can see in a candlestick chart. I prefer it because it tells me multiple things at once. Like a quick glance, you can kind of see a lot of what's going on. And then there are specific things that I look for. So I look for like bullish runs. So when the stock over a series of a few days is gaining momentum, it's growing, how much is it growing? Because it can also kind of tell you the momentum. So, if there's small increases every single day, it's like kind of like, I don't know, like a linear growth. If they're small at first and they start to get really fast and the bars are much taller, it's kind of growing momentum. Like the price is increasing more per day, and then you can kind of see that taper off. Now that doesn't always happen, because sometimes it can be really ramping up and then suddenly it just flips and it is now going in the opposite direction and the price is dropping very quickly. So nobody really knows what's going to happen in the stock market. You can read the stock market charts, but there's no guarantee. Now, another thing I'm learning is that there are things like price resistance and support lines. No, resistance and support prices. Let's just say that. So as a stock is kind of growing and it hits a certain price and it can't seem to pass it, and it kind of reduces and then rallies back and hits the same price again, roughly reduces, hits the same price again, and it seems to just stop at that price. It can't seem to break through that price and continue up. That's kind of like a resistance line. So there's something about that price. Either people don't evaluate that company enough to pass that price. And if you look historically, even though historical trends do not predict the future, if it keeps hitting that price and it can't seem to pass it, just be wary of that. So that was something I was looking at actually in this last stock, and I noticed that it always seemed to push or grow a certain percent and then pull back, because naturally that's kind of what happens. It grows and then pulls back. And so just be aware of price resistance and support lines. Now they can flip, so you can have a resistance line where the price can't seem to penetrate through and it bounces back and it keeps trying to hit that price, but for whatever reason people don't evaluate the company at that value, so it can't break through that price. But sometimes it does. It actually makes it through that price higher, and when it returns to that price, so it's grown through whatever that resistance line was and it comes back, now that resistance line becomes a support line. So now the price actually hits that and doesn't drop below anymore. Now it goes back up, and it may grow and reduce back down and hit that line and then go back up. So resistance and support, you got to kind of watch out for that. You don't really know if it's going to be a resistance or a support, but weird stuff happens kind of like when it gets to that price. And every stock has a different kind of resistance and support price. They can have multiple ones. So even though it's past that 5 years ago, past that price 5 years ago, and now it's kind of growing, it may form a new one. So that's why it's risky and it's kind of unknown. But that's another thing I was picking up. All right, there you go. So that's the story. A little bit more about me. I'm still learning stock trading. I think of stock trading a little bit differently than investing. Investing is kind of like buying in and holding for the long term. That I've been doing for a while, but stock trading where you get in at a certain price and get out at a certain price, and usually the time frame between that is quite short. That's still new to me, so it's a learning process for me. I'm going to be kind of filming these videos as I do this over time. Probably going to make some money, probably going to lose some money. I'm probably going to share it all with you guys. So it's more of a learning process for me, and I kind of want to like document that process. So come along for the ride if you want. I don't endorse any of the stocks that I'm buying. I'm not sponsored by anything. I don't recommend buying anything that I'm buying. None of this is advice. It's just showing what I'm doing, the process that I'm going through, the things I think about when I make the trade. I'll probably share the units and all that kind of stuff with you guys so that you know, I guess, what volume is being traded. And if you guys have any questions or comments, leave them in the comments below. Hope you like this video. Share it, keep track, subscribe if you want. See you guys in the next one. Bye. Because people like to see things in charts. So take it for what you will. Whoa. Did you see this like demon cat running around here? Hey guys, I am absolutely terrible at this vlog thing. I think the last time I made a video was on vacation and I didn't post it, so I gotta post that, I gotta post this one. So many videos, guys. I gotta post so many videos.